Welcome to this video today, which is on Sunday 13th of August. We're just going to be looking at a couple of currency pairs we looked at in a video review last week, which are USD CAD and AUD USD. Just bring our view up to date. Also, I want to look at another commodity currency against the US dollar, the Norwegian krone, which I think offers a great risk to reward trade. Now, regular viewers will know over the last few weeks we've been heavily focused on selling the commodity currencies against the yen and the USD. Now, commodity currencies have moved down really nicely on the yen. Still think there's plenty of downside. They haven't moved much on the USD yet, but I think that's going to change. Now, in today's video, I'm not going to feature the NZD against the USD. It's a very similar chart formation to AUD USD, and NZD has moved quite nicely on the US dollar, looking for the AUD to play catch up. Now, in terms of looking at the charts, which we'll do in a moment, we will be using our favourite tool in Forex trading, the COT, Commitment to Traders Report. For those of you unfamiliar with it, click on the link beneath this video for more information. It's a fantastic tool for giving you clues to where the chart may go. If you want to watch the video through now, what we keep in mind when looking at the report is we want to trade with smart money commercial hedgers when they diverge from non-commercial speculators. Now, in terms of today's video as well, I'm also going to be featuring one of my favourite indicators in Forex, which I would encourage anyone to investigate more and learn how to use it. It's Wells Wilder's original ADX. Okay, so we'll be using that as well. And in terms of the charts, we're going to start with USD CAD. Before we draw levels and look at potential entries, we're going to look at the commitment of traders' positions. The Canadian dollar against the US dollar, it's the foreign currency first on the futures markets where the COT data comes from. In a moment, we're going to move this around, obviously, the USD CAD. But this chart is good because it graphically illustrates what the smart money commercials are doing against the large speculators. Commercials in red, large speculators in green, the not so important small speculators in blue. Now, this chart is actually from COT base. And I think if you're learning to use CFTC data, it's good to see it graphically, okay? Now, what really interests us on this chart is this bottom in the Canadian dollar here. Look at the commercials step up their buying into the bottom. They hold a really big long position. The speculators go against them. It breaks in favour of the commercials. Now, the good thing about commercials is they do know when a currency has moved too far to the upside or downside. That's the only time they're going to move their hedges, and that's exactly what they do. They get out of their hedges, start to reduce them. So on this run up here, okay, they have basically moved short the Canadian dollar. Same time, speculators who've been hit on stop go long the Canadian dollar. And you do get a little bit of an overshoot and now a little bit of a retracement, okay? Now, from our perspective, you've still got quite a big divergence between the groups, and they're adding, okay? So this, in our view, is going to break in favour of the commercials more, and I think we're going to see some more USD CAD strength. Incidentally, you have got the blue line, which is small speculators. They're not really important, okay? It's the commercials and large speculators who are. You've got to have divergence between those two groups, but they can give you a little bit of a clue to sentiment. You can see how big their long CAD position, short USD position is. Just showing the sentiment, is obviously bearish, the USD on the CAD. We've actually seen the USD move up a bit. That's a positive sign for us. And we now expect more strength. So let's move over and look at some levels on the chart, some potential entries. Part of USD CAD, obviously we've done a couple of previous videos on how we've been playing this pair, so I'm just going to quickly review how we've been trading it for new viewers. Now, obviously, big, strong move down in the USD, and from about the 120 or just below the 128 level, the commercials start to get rid of their short positions and basically move their hedges. Okay, they're only moving their hedges because they think the Canadian dollar has moved too far too quickly on the USD, or the USD has moved down too far. So the commercials, no, yeah, fair value. They're moving their hedges. Speculators are coming in now to sell heavily. They aggressively sell down here, but we hammer out some support. Okay, now what we're always looking for in a big downtrend, if we're looking for a reversal, is we'll put the ADX up. This is the original one from Wells Wilder. It's one of the most, yeah, for me, powerful indicators out there, okay, that you can get. Hardly anyone uses it, which I find odd. Now, in terms of how to use it, it's easy. Once you get above 40, you just wait for the line to turn down. That signals a move against the prevailing trend. The prevailing trend can be down or it can be up. You just have to look at the trend for yourself. This one is obviously down, okay? The bigger the trend, the better the ADX turn down works. That's just from my experience. So what are we going to do? Here's your ADX candle here. We'll come in through 125.20. We know, obviously, we've got a lot of commercial buying, a lot of specs coming in short. We want to see if this 20-day moving average is taken out here. Now, in a strong trend, 20-day moving average will very often provide good resistance in a downtrend or good support in an uptrend. And yeah, I said it in the previous video, since we took out the 20-day moving average back in May, we've really only had one significant test. These three candles here trying to get through back in June, nearly come up to test, can't do it. And then we stay away from the 20-day moving average. Now, our own view is the 20 is going to get run, but when we come up towards the 126 level, we've obviously got a little bit of profit from our entry at 125.20, bank out half, jack the stop up on the other half. Then we were looking to come back in on maybe a dip. Didn't think this quadruple bottom would be taken out, or just if we get through the 20. We ended up putting it back in as we got through 126. Then we came up. Now, this red candle here, Friday, US inflation obviously very important. So we decided to bring our stop up to 126.65, and we just get clipped on stop. But we got a small profit, got 145 odd pips, so that's okay. Now we want to get back in. So how are we going to get back in? Well, my own view is you've got, yeah, obviously low volatility here. You can see it on the bands. You know speculators are selling hard against the commercials, okay? You think about it, the speculators were long here, and then they start to aggressively go short, and they're starting to get run on stop. They will see this reversal here, I think, as an opportunity to add to shorts. So we need to see where we go. We've got support at the 20-day moving average, okay? But in terms of coming in, come in on a breakout, okay? So if we do reverse, just come in through the double top. Obviously, you've got the support at this candle bottom here, candle body top here, and the tail. Okay, so that's good defined resistance, and of course you've got support at the 20. If it comes down towards 20, we'll have to see, you know, how we move. But we're certainly looking to buy the USD. We don't think this level is going to be taken out decisively. Okay. Now, if we do break higher, where are we going to go? Well, I've said previously 130, these candles here, good level, yeah, that should be the first stop. However, I think because the dollar is so oversold, we're going to go a little bit higher. We're going to go to 132.30 about, okay, you could say 132 for a round number, so plenty of upside if, of course, what we think comes right. Where would you want your stop? Well, if you break higher, got a diagonal line there, okay, straight through the 20. 20's at 126. Got these two candle tops here, these two big candles, and a body, and a body, and the bottom of a body as well. So you've got double trend line support. So tuck the stop back behind here. She runs, yeah. Basically, You can bring this stop up, but I would wait until you took out 128 decisively. Then the stop can come in, because I think once we start running, the specs are going to get hurt straight up towards the 132 level. Like I said, if we come back towards the round number at 126, yeah, the 20 and the double trend line support, we'll look to key off that level, but we'll do it on strength. We won't just buy into the level. So, right, that is my review of USD CAD, and now we are going to shift to AUD USD. We're going to look at the AUD USD COT net traders positions, and let's just go to the right. You can see large speculators hold their biggest net long position in the Aussie. They took out a few longs this week, but it's minor. Commercials did the same. They hold their biggest net short position on the chart. What we've seen, obviously, is after this surge in the Aussie, we have started to come down in favour of the commercials. The extremity of the position points, in our view, to more Aussie dollar weakness. And just as we noted on the CAD, look at these small speculators. Just giving you an indication of the sentiment towards the USD. It's bearish. It's bearish against the Canadian dollar. It's bearish against the Aussie. So, yeah, from our point of view, we're basically the opposite. We're getting very bullish of the USD. Let's shift to the daily chart, and I'll draw some levels. The USD daily chart, and just for new viewers, I'm just quickly review how we've been playing this trade. Now, when we break above the 20-day moving average here, we start to travel north, dip back to the 20. Yeah, 5 candles here. Find support at it. She pushes off strongly to the upside. Now we've got some sideways consolidation here. Okay. Now, when you get a nice strong move up like this, so obviously, like I said, looking at the ADX, she moves above 40, she turns down. Okay, on this candle. This candle here, for us, very significant. Why? Because the tail pushes up to take this tail out. We fail back below 80. 80 is now resistance. Look, you've got 2 bodies there, a tail, another 2 bodies. Nice resistance, the round number for us. We think she's going to be traveling south. We let her get away from the round number. We never sell just beneath a round number. Always give it at least 30 pips. And what we do is we think, with all the commercials selling in, spec buying, 20-day moving average will not provide support. It provides a little bit of support here. We settle on it. Then we're through it. Come back to test it. Try and get up, can't. Now this candle might test it, okay? Now, in terms of getting in fresh on this trade, it's either a rally or a break lower. So in terms of a rally, there's your resistance at the 20-day. I think, it's just below 79.50. It's not a brick wall, the 20-day moving average. It's giving you an indication of where an area of resistance might be. I would pick 79.50, okay? In terms of you got a body there, tail, tail, tail. You got another tail arguably over here as well. So this double trend line resistance is in place. You can look to sell back to the level. The way I would do it is if it got up towards 79.50, don't just sell. Wait for it to come back maybe through the round number. Or if she jumps above 79.50, look to sell back through the 20-day moving average. I'd be surprised if 80 could be taken out on a close basis, okay? So that's what I'd do on a rally higher if I wasn't in. In terms of going lower, you've got support there, okay? These 2 tails, then the big push up through, we found support. So if she comes through, say 79.35, my own view is we're going lower. Where could we go to? Well, 77 is certainly on the cards. My own view is, just based around my view of how the COT net trader set up and the fundamentals behind the chart, I think 75.50, possibly even 75 is on the cards. Okay, so she comes through, seller, nice big red candle. That would probably indicate a follow through down to this level here. And what you can do is trail your stop down. So once you get through 78, put your stop behind the round number. The 20-day will obviously have sneaked down by then. So from our position so far, we have a minorish profit. Nothing to get excited about, but I'm hoping we will get a little bit more excited in the coming week. Looking for, obviously, the Aussie to break down. So let's see what happens. Obviously, I'll be updating this in the CAD in the November Centre. Now I want to look at a less traded pair, which I think offers a really good risk to reward. It's another commodity currency. It's going to be, USD against the Norwegian krona. Part of USD Norwegian krona. And in terms of this pair, I really like the look of it. In terms of the chart formation and also the fundamentals behind the chart, and what you want, will give you good risk reward trades. If you've got bearish extreme in one currency and a bullish extreme in the other, there's two sides obviously to the pair. And in terms of the USD, we know spec short positions, their highest since 2013. Now, if we take the NOK and other Europeans, I put dollar, I meant follow, they followed the euro generally higher. Okay, now you could make an argument for saying the fundamentals are bullish for the euro. I personally don't think so. So NOK has just been dragged up by the euro. Go and look at any of the other Europeans, like Danish krona, Swedish krona. They've all got similar chart formations. So they're just being dragged higher. It's not based on the strong fundamentals of Norway. Okay. Now, also, I put, the NOK is vulnerable to a sell-off in oil. I personally think there's going to be a sell-off in oil. Norway, Europe's biggest exporter, it's going to get hurt if we do get that sell-off, okay? More so than, say, the CAD, right? So the fundamentals behind the chart, in my view, point to strength in the USD. And obviously, the USD, a big, nice downtrend. Now some sideways action. Now, in terms of our trading on this pair, what we're always looking for is if we've got a nice strong downtrend and an ADX above 40, we're going to sell the turn down. We get the turn down here, so we can come in long above 790. It confirms for us a triple bottom. Okay, now in terms of our trade, we held it. Let's come up to the 20-day moving average. Now, we want the 20-day moving average, obviously, to be taken out. I thought it was going to be taken out here. It wasn't. Came back a little bit, still not taken out. Volatility low. Thought, what's going to happen is we're going to break strongly above the 20 and follow through to the upside. So what does she do? She goes up through the 20, promptly drops back, and we're now out of the trade. You give back our profit, basically, just tiny profit to cover the spread. Now, in terms of what I want to do now is if we get down towards this triple bottom, I'll be looking for buying opportunities coming in on strength. Or what I think might happen is, okay, we come back here, but I think we could well come back through the 20-day moving average again. So I'd like to pick her up through the 20-day and these candles here. Okay, so you've got two bodies. If I draw across, get it straight. There we go. Got two bodies here. This one doesn't quite get it. Tail, body sitting below. So you've got low volatility, okay? Points to a big move. I'm looking, obviously, to buy weakness. When I say weakness, if it came down here, I'd look to buy some strength off the level, or just coming back in through the 20. 796.14 is the 20. I'd give it a little bit of room. 796.50, something like that. Just think we're going to get a big move now. Just to correct the dollar's bearish extreme, we are going to go up to 8.35 in my view. And personally, a little bit of weakness in oil. Dollar's so oversold, we can easily get up to 8.55, okay? So for me, plenty of upside. Now, if she comes down, we'll just have to see how she pans out, so to speak. But in terms of we break up here, where would I put my stop? Well, I would put it back behind here. be behind these candles here. Okay, so basically behind the 790 level, probably give it a couple of big points away, 7.8, 8.30, something like that. Gives a decent risk to reward. Okay, and look for a strong blue candle to follow through to the upside. And I've said it before, I do like trading these more minor pairs because you do get fantastic risk reward trades, right or wrong, and you don't have so much speculative interest in them. So that, I've always found them, attractive to trade. So that is my review of the USD against the NOK. Hi, welcome back after that short review there, 3 Forex pairs. That is my view as of right now. It can obviously change in line with the market conditions. If you want our full trading techniques and our daily technical analysis major Forex pairs, a life membership, simply click on the link beneath this video. Now, a few weeks ago, someone was saying to me, the COT isn't really working. Things are not breaking in favour of the commercials. And you've got to keep firmly in mind, if you're using the COT, the commercials will always be right about major trend changes, but prices can obviously overshoot in the short term, which is what they did against the yen. But look at the break in favour of the commercials who are bullish the yen on the commodity currencies. Commodity currencies have got battered against the yen, still more downside in our view. I think the same is going to happen with the commodity currencies against the USD. When you're using COT, always use your technicals, always use good money management. If you're stopped out, that's fine, as long as you've got a small loss. We got stopped out in the commodity currencies for small losses before we caught the big downturn. It's just the way it is. Okay, so always use patience with the COT and use technical analysis, good money management. In terms of the COT, just for new viewers, it does give you confidence in terms of your technicals because you know what's going on behind the chart in terms of sentiment. So I think it's a great tool to use. Regular viewers though, I just really like it. It's based upon sound logic as well. Logic that anyone can understand. Proven throughout the years that I've been trading, the commercials are the smart money. You trade with them, you can get an edge in your quest for profit. So that is the video for today. Thank you very much for watching me as per usual.